Hey everyone, Chipotle reported second quarter 2023 earnings results. So in this video, I'm going to review those figures. I'm also going to update my recommendation of Chipotle stock coming into these results. I had Chipotle stock rated as a hold. Now I've been impressed with Chipotle stock for several years now. I've been following it since 2019. I've really liked what this new CEO has done with the company, but I've never recommended this stock. I shouldn't say I don't think I've ever recommended this stock as a buy in all those years, even though I've been impressed, just because the valuation has always been so rich. The stock has always been expensive relative to its peers, and so I haven't recommended the stock as a buy. So you're going to want to tune in to see if I'm changing that, and I'll give you a clue. I am upgrading Chipotle stock. So let's get into these results and let me highlight what's going on here. So total revenue of 2.5 billion increased by 13.6% year over year. Earnings per share of $12.32 was a 33.2% increase year over year. Truly impressive numbers for what is really a restaurant stock. It's demonstrating phenomenal growth being a restaurant stock. So this is what's been truly impressive. Comp sales, which measures sales growth from existing locations, right? It strips out growth in revenue from new locations you add. So it just measures growth in demand from existing locations. This increased by 7.4%, while Chipotle added 47 new locations in the second quarter to reach a total of 3,268 locations. Now, management has ambitions of adding or growing up to or even higher than 6,000 locations over the next decade or so. So, Chipotle has what it feels like a long runway for growth ahead. In restaurant sales increased by 15.8%. And if you do some math here, if in restaurant sales increased by 15.8% and total revenue or comp sales only grew by 7.4%, you can see that what's falling is digital sales. So orders for delivery, orders for takeout, those are falling. The digital sales as a percentage of overall sales is falling for Chipotle as people are going out more often, wanting to leave the house and eating while they're out and about. Cash flow from operations jumped to 1.04 billion, which was up from 570 million. So overall phenomenal numbers in this quarter for Chipotle. And you might ask, well, why did the stock price fall by 10 almost 10% after these earnings were released? And in my opinion, it's because of the mediocre forecast. Management is forecasting comp growth of low to mid single digits in the third quarter. And to me, whenever I see low to mid single digits, I'm looking at anywhere from 1 to 4% growth. That's to me low to mid single digits. Mid single digits would have been 4 to 6% growth. And then high single digits to me means 7 to 9% growth. So when management says low to mid single digits, you're looking at 1 to 4% comp growth, which would be a deceleration from the 7.4% growth in the current quarter. Now, I've been awaiting a slowdown from Chipotle for a while now. I was waiting for some kind of mean reversion. It has been outperforming so aggressively that I've been, hesitant to go into this stock because, a company cannot outperform like that for the very long term. Eventually, there's mean reversion, right? Competitors copy the things that you're doing that are working. Management sometimes gets overexcited, or you reach for those incremental areas of growth which are not as easy as the low hanging fruit, and so that growth kind of mean reverts. And I'm not surprised to see this, and I don't see this as some terrible news. This is just something I was expecting, and if I was an investor, I would have been waiting, and in fact I have been waiting for this kind of moment before I could recommend or before I would consider jumping into this stock. You don't want to get it when it's at its peak performance, because that's when the valuation is also at its peak, when everyone expects it to continue performing this excellently, right? And the company's planning to open 270 locations in 2023. Recall just, 2 years ago, this company was just planning to open 200 locations a year. So they've meaningfully increased the pace of new location opening as well. Now, what is good for Chipotle in that they're increasing new store location openings at a good time because their sales per restaurant has also been growing aggressively, right? So when you have that kind of business where your sales per restaurant is growing, that signals strong demand from consumers that say, you know what, we want more of whatever it is that you're offering. We want more Chipotle. And so Chipotle is giving customers what they want by opening new locations. They're not forcing this growth without that customer demand that's pulling that growth onward. So, I mentioned I will talk about my recommendation for Chipotle stock, and I am upgrading Chipotle stock from just a hold. Now I'm upgrading it to the borderline of hold slash buy. So I've upgraded it to this hold slash buy because a good quarter in terms of performance. Yes, I understand the mediocre forecast, but also the valuation is now down with that 10% drop in the stock price coupled with the growth in earnings per share. So, for all those reasons, I'm bringing Chipotle stock up to the borderline of hold slash buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.